Hi traders, you're welcome to this video. Today we are going to be breaking down a super practical and easy to follow 1 hour forex trading strategy. Okay, this one's perfect if you are looking for a structured, no nonsense approach to analyzing short-term price movements. So if you are a trader that fancy short-term trades, whether you are a day trader or a scalper, then this video is for you. So first things first, why use the 1 hour chart? The 1 hour time frame is a great middle ground. Okay, the 1 hour time frame, it's a great middle ground because it gives us enough market movement for clear trends, right? Without the noise of lower time frames. This way, you can catch solid price swings without being glued to your screen all day. Plus, it's manageable for people with busy schedules. So, if you are a very busy person, maybe you have a lot of work that you do during the day, and perhaps you only have spare time in the evening or at night, then this strategy is going to be beneficial for you because it can help you to not necessarily spend so much time on your charts. Okay, so this strategy, the 1 hour strategy, is effective even for those with busy schedules. Okay, so basically, to set up this strategy, we are going to use a couple of simple indicators, and we are going to be focusing on price action analysis and two key exponential moving averages, which are the 9 EMA and the 20 EMA. The idea here is to combine the clarity of price action with the smooth trend visibility EMAs that is provided by the 9 and 20 EMA. Okay, so we're going to be loading the EMAs to our chart. We're going to start with the 9 EMA, and then we are going to add the 20 EMA as well. Okay, now here is how it works. The EMA crossover, this is a crossover strategy. Okay, so when the 9 EMA crosses above the 20 EMA, it signals a possible uptrend. This is our cue to start looking for potential buy setups. Now on the flip side, when the 9 EMA crosses below the 20 EMA, like what happened here, we are potentially seeing a downtrend. Great for sell opportunities. Now this crossover method acts like our green light for identifying trend direction. So with the trend identified, we turn to price action for confirmation. What we are looking for are strong bullish candle close or bearish candle close. So in the case of a bearish crossover, what we are going to be looking out for are strong bearish candles. Okay, for example, after this crossover happened, we can see the 9 EMA crossed below the 20 EMA. Shortly afterwards, we had a long bearish candle. That was our confirmation candle in this case. So after the confirmation candle, we can then enter our sell trade. Okay, so after a crossover, you should be looking out for a confirmation candle. For example, in this case, we had a crossover and we had a long bullish candle. That was our confirmation candle in this case. And you can see that right after this, the asset sold all the way down to this point. Right after this, the asset bought all the way up to this point. Okay, so it's important to get that confirmation candle. It could be a bullish reversal candle for a buy and then a bearish reversal candle for a sell. Okay, this way we are adding a layer of validation before jumping into a trade. Now let's talk about risk management. Setting a stop loss is key. Okay, just place it below the most recent swing low for a buy. For example, had it been we had entered a buy trade right after this crossover and this confirmation bullish candle formed, we would have set our stop loss below the previous swing low. That should have been somewhere around here. Okay, it should have been a good place to set the stop loss. And then for a sell trade, we would have considered setting our stop loss right above the previous swing high. That would have been somewhere around here, because we would have entered after the crossover and after the confirmation candle. We can see this long sell candle that served as a confirmation. So we would have entered around here, set our stop loss above here. Okay. Now for exits, a great method is to wait until the 9 EMA crosses back over the 20 EMA in the opposite direction. So for example, this is a sell trade. So in order to exit our sell, we would have just waited for the 9 EMA to cross above the 20 EMA. We would have exited our sell somewhere around here. Now as for the case of a buy, after we had entered this buy trade, we would have waited for the 9 EMA to cross below 20 EMA. So we would have exited our buy trade somewhere around here. Okay. Now this exiting when the crossover happens in the opposite direction usually means that the trend may be slowing down. Whenever you have that opposing crossover, it means that the trend may be slowing down or reversing. So that's the reason why it's a good cue to close the trade. Okay. Now remember that practice makes perfect. It's crucial to backtest this strategy on demo accounts first. Every trade isn't going to be a winner. Okay, it's important for you to note that. But with solid risk management and patience, this strategy has a strong potential to enhance your trading. Okay, but it's important to note that profit is not guaranteed. Okay, now in addition to the crossover signals, it's important to also use support and resistance levels. Okay, because these levels are going to also help you to know when a potential reversal is imminent, right? When a potential reversal is imminent, these levels are going to help you to identify that. And even in the case of a trending market, these levels can even add to your confirmation as to whether the trend is continuing after a pullback. For example, in the case of this buy trend, we can see that we had a consolidation around here, right? You can see it's obvious. In fact, this is more like an ascending triangle, right? We had an ascending triangle. It's actually an ascending triangle. We had an ascending triangle around here, and note that this was a bullish trend. Can we see? We can see that this is actually a bullish trend that had already begun, some days ago, right? And the bullish trend was still continuing. Okay. Now it got to a point that consolidation began around here, and then we had an ascending triangle forming. Okay, and we can see that because of that consolidation, the moving averages were moving sideways. Now we can see that this resistance zone, this horizontal resistance zone, played a very important role, because when price broke above it, the trader will have noticed that the bullish move is about to continue. But had it been this was not there, if this was not there, you might not know exactly that a breakout has occurred. So it's important that you also set support and resistance levels so that you can know when a potential continuation is about to happen or a potential reversal, and it can also help you to know possible places to exit your trade apart from the crossover signals that you also use for your exit. Okay, so basically that is it. I hope you found this 1 hour forex strategy as valuable as I do. Basically, this is a very easy strategy. It is just based on the crossovers from the moving averages, and then addition of price action, candlestick patterns, and support and resistance levels. And it's also important to combine other indicators as well, just for extra confirmation. Yeah, you can add other indicators of your choice just for additional confirmation. Okay, if you are new here, if you're new to this channel, the Forex Geek, don't forget to subscribe for more tips and trading strategies that break down complex trading concepts. So give this one a try and let me know in the comments how it goes. Thanks for watching and see you in the next video.